morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner. I'm joining you from a sunny and beautiful Denver, Colorado today, joined by my friend, Schwab Regional Investment Strategist, Rachel Deschel. Good morning, Rachel. It's great to have you back. How are things in your neck of the woods today?
Good morning. It is great to be here, and it's great to have you back. I know you're even here on your day off, man, so thank you for joining me.
Well, I got to say, sometimes, we are forced into vacation, and sometimes we recognize that I don't want to leave people hanging. We've got an opportunity to discuss what's going on in the market this week. We've got some companies we're going to be hearing from. Big earnings week on deck with some familiar names. I think we'll be hearing from Alphabet and Microsoft and Tesla, among others. So plenty to get to this week, but we're going to kick it off with a look at some charts, Rachel, a look at how the market finished last week, and maybe what we can expect going forward. So with all of that, let me have you all say hi to Mike Fairborn there in the chat, who will manage things for us, getting to questions and comments that we won't get to in the chat, but we're going to try to bring those in nonetheless. Everybody feel free to post for the duration of our show. We'll go about 45 minutes in total. Remember to follow Mike and me on X, Kevin Horner CS, Mike Fairborn CS. We don't have Rachel posting there just yet, but trust me, rest assured, if she gets on Twitter, everybody, you're going to hear about it from us. So with that, let's get to our disclosures, and then we'll get into looking at what's happening in the market this morning. First of all, please remember that our discussion here is exclusively for your information and your education. We do not make recommendations. We do not make endorsements here for a specific approach to trading the market. With that in mind, additionally, remember that our approaches here is to look into technical analysis. We hit charts, we look at trend. We want to remind you that technical analysis is merely a piece of the decision-making puzzle, and we discourage you from making decisions exclusively based on what you get from the technicals. And then let's get our agenda reviewed briefly here. For those of you who are here frequently, you know what we do. We do top-down review. So we'll start with our bigger of the indices. We'll start with the S&P 500. We'll look at the NASDAQ 100. We'll look at the Russell 2000. Need to look at the semis as well. Maybe a little bit of sector look today to get a picture on rotation of assets here. We've had a strong leadership this year from technology and industrials, but we do have a couple of sectors potentially set up to get out of their negativity cycle here, if you will. So we'll look at a few of those, and then, of course, as always, some stocks in the news. And with that, everybody, let's get to that S&P 500 chart. Rachel, new high there achieved intraday on Friday. Are you growing bored yet with this onslaughting uptrend? Just an unforgiving move to the upside, very limited give back.
A great question. I'm not getting bored quite yet because the trend is my friend. So I haven't seen a break in the trend yet. I mean, we're still making higher highs, higher lows. All the moving averages are sloping up. We just hit another overbought level in the RSI. So that's kind of all the things that I'm seeing. So no, I'm not getting bored quite yet. I think there's still a lot more to see, a lot more to come. But what are your thoughts there, Kevin?
A lot of the same, obviously. Boredom is a little tongue-in-cheek, and I use it as a means of reminding us not to get complacent here, right? We can do that pretty easily. When we have a consistency of buying up every pullback, traders tend to just go ahead and think that it's never going to end. We know that's going to change. We just don't know when. And so the encouragement here is to have your thesis and know how you want to approach the market, know what levels are the ones at which you think could be a signal to a change in things here. Now, for a lot of traders, Rachel, that's going to be the 20-day moving average. We've talked about the consistency here. Friday was 12 straight weeks, officially 60 sessions in a row above the 20-day moving average on a closing basis. That's getting pretty darn healthy. It's really hard to look at that as a negative, of course, and yet knowing what we know about trend analysis, we have to be prepared so that when that does change, that does break, we know how we're going to take action, whether that be mitigating risk through reducing position size, building cash, etc. So as always, Rachel, having a plan and knowing how to attack it seems to be the method that many traders are probably looking into right here. What are your thoughts about this week here now with the S&P at highs? Can we just continue to trade the trend until something changes? Is it that simple?
We could, but we could also look for some signals, kind of like warning signals, by looking at momentum and relative strength alongside the trend as well. Because obviously, we always talk about how price is the most important thing. It's the thing that pays. But when we look at momentum, I think the first thing that we can look at under the surface is the pace of that trend. So with that RSI, even though it's still making overbought or reaching overbought levels, it's making a lower high while price is making a higher high. So that's just kind of one of the things that you could possibly use as part of a plan. And then just looking at relative strength and market breadth as well to see where rotation could possibly end up.
All right, so we'll shift over to market breadth after we get through our major indices here. I'm wondering if that means, Rachel, when you're looking at the RSI, if we having made a new high yesterday, Friday, if Friday's trade was our high in this rally, for example, if that RSI were to come lower, fish hook to the downside, back through the 70 line to the downside, and we were to get a close below the Friday low, for example, is that the kind of signal that might be at least a very early signal that some traders might use, just based on the bearish divergence potential with a new high in price?
Yeah, exactly. That could be something that traders will look for, because that close below the high of the low day, it's just, or a close above that. You say it better than I do.
If this day is our high day, then our low day, or our low trade on the high day on July 18, about 62.85. But again, if that's the case, Rachel, that could also devolve into a sideways or a consolidation. We've basically gone sideways for 2 weeks, even though we've managed to make new highs. This is ultimately just holding a level, holding a range here, right?
And you said it best. I know you always say it best there, but one of the things that I think we need to realize as traders and as part of just kind of building our plan is that price doesn't always have to correct through price. It also corrects through time. So it doesn't always mean that because the price has gone up for so long, it must come down. It sometimes just takes time to just digest and shake some of these things out. So I think what you mentioned, Evan, I mean, that last couple of weeks, that sideways moving trend, sometimes that's what we need. In the marathon, we can't sprint all the time. We gotta kind of pace ourselves.
That's true. Yeah, it's a good reminder. I know we tend to get a little enthusiastic when the market's pushing higher. It has been pushing. Plenty of reason to stay the course. But as always, know what you want to do, everybody. Let's see if there's any discrepancy here with the NDX. I'm of the belief we're going to see a lot of consistency here. New high, it looks like, here intraday today. 20-day moving average. I mean, again, really, really strong support over the last 2 weeks because, and I say strong, defining it as strong, everybody, is merely looking at the number of tests at that zone with lows consistently over the last 3 weeks, testing that same horizontal level right around 22,700, Rachel. So right equal with the 20-day moving average in orange, just shy of 22.7 right now.
Yep, that's exactly what I'm seeing too. And I mean, this kind of speaks to just, again, some of that rotation that's taking place. I know some of our leaders, like some of the larger stocks that are represented in some of these indexes, carry the largest weight. And so we may see rotation into some other areas in the market as well that carry a little bit less weight to just kind of catch up to this move too.
Yeah, and it's just been on the heels of technology, of course, as we noted, the rally here in both the NASDAQ and the S&P, strong, both leaning into technology. And the difference here, Rachel, when we look at the S&P versus the NASDAQ, Yes, the NASDAQ is very, very close to making a confirmed new high with RSI. So more or less validating the price move we've seen in the NASDAQ.
Exactly. Yep, exactly. And that's what we're seeing. And usually, I mean, historically, we've seen that technology has been the leader in nearly every bull market that we've had. And that's kind of what we're seeing now. I mean, technology has been the leader from a trend basis, even momentum and relative strength here too. So we're just kind of waiting for some of those other areas of the market to play a little bit of catch up.
Yeah, and there's nothing wrong with playing a little bit of catch up, right? It might help us to know where we have potentially an area to actually expose money for wider swings or bigger bounces because they may have been laggers. Like I said, we're going to look at those momentarily, everybody, because we do want to get a peek at rotation and get an idea as to sector review or sector allocation moves. So we'll look at that momentarily. The last one we're going to hit before we get there, though, let's check out the Russell. Small caps have been kind of bouncing nicely here. Look, this has been a far better, for a lot of traders, a far better move than maybe anticipated here. Plenty of concern as it relates to the small caps, but when I look at the trend here, Rachel, it's really hard once more to deny what's been going on. We've got that beautifully rising 20-day moving average, providing support just as recently as Thursday of last week. Today's candle, not that great, but it is the first 10 minutes of trading. We're not gonna grow too concerned in the first 10 minutes, but this is again a reminder that price is giving us a little bit of a heads up over the last 3 to 4 months. That being potentially that this conversation that had been, April, May was around the potential for putting us into recessionary cycle. That doesn't seem to be what's going on right now. At least price action is telling us something different, isn't it?
It's telling us something completely different, honestly, because I mean, we had that inverted head and shoulders pattern that occurred at the bottom. We're still holding above all of those moving averages, the 20, the 50, and the 200. And then the other thing is the RSI has steadily stayed above 50. I saw your nice little trend line down there, Kevin. Which means we've been in a bullish regime for small caps. So yeah, we're just knocking at the door of that resistance level once again. So we'll have to see if we can kind of break through that or if it's going to add a little bit more of a resistance there.
Yeah, and it's tough to know. It's too early, probably, but that candle, I think that my white line is disguising the candle from today. Excuse me. Let me pull this off. So yeah, this is the Friday candle that open high, lower close, halfway down the candle from Thursday, but not more than that. And then today you're getting a little bit of a lift. So of course, we could be in consolidation. We could be just allowing, like you mentioned a moment ago, time to pass, which allows those moving averages to climb higher as price just kind of meanders sideways. We're not gonna argue with that. If the inverted head and shoulders is valid, Rachel, I always like to just remind ourselves of an approximate target for such a move. So let me just do a line here real quickly from our neckline to our bottom, and let's just get a target possibility. And I'll just remind you all, when we start talking measured move targets, these are never a guarantee to be achieved. So what we're going to do is just draw the line as though it were a legitimate breakout. So if the ledge here at 2110, which has been historically an important level for us, everybody, we've talked a number of times about that level, but in this case, it is the neckline of that inverted head and shoulder appearance. And a way that some traders would make the calculation is just to take the height from the neckline to your low and add it to the neckline to the upside. Now that it has been broken out, tested, and held, and we've started trending thereafter, this might present an area where some traders, Rachel, will start to look to take some of their trade off. So if you're looking at that level, everybody, it might be in the ballpark of 24.85. But again, by no means a guarantee to get there, Rachel. But if we want to be optimistic, if we want to be bullish, it stands to reason that that's a level we could rally to. Those are prior highs.
Yeah, I would echo that, Kevin, because, again, patterns are not guarantees, but math and markets are fascinating at the levels that some of the patterns can project. So I guess one last thing on this chart, if you would for me, Kevin, if you could just take this time frame and go down to a 20-day hourly, because we talked about the last couple weeks of trading, and I think just going down to a smaller time frame as part of your process helps a little bit. So looking at where that gap took place from, I want to say July 11th, where we had that gap down on July 11th open, if you connect a trend line going forward to those highs that you see right above that, it almost looks like a possible.
The high on the 11th?
No, the gap down below, right where we gap below the 6 period moving average. There you go. Perfect. So it looks a little bit like an inverse head and shoulders pattern, and you could even slant it a little bit too. But I mean, just looking at different time frames, you can kind of see different patterns possibly taking place.
Good call out. Yeah, we don't get into the intra periods nearly enough anymore, and I know that we need to do this a little more frequently, whether it be an hour-long bar chart or 4-hour candles. It's a great reminder we can absolutely apply everything that we know and utilize on the daily charts to hour-long bars, 4-hour-long candles. Take your pick, everybody. But it's a great reminder that there are underlying patterns that could be playing into things here as well. So, yeah, if this is legit, then unfortunately, Rachel, we got to start talking about the potential neckline. So if we were to do that, you mentioned that it's likely a gentle upslope. I would probably think it might be somewhere through like this zone. What do you think? Like the neckline, meaning if we retreated from here, we would want to maintain this approximation of an uptrend in this very short-term window to tell us that there's still more upside to the short-term trend.
Great minds think alike, man. That's the level that I'm looking at as well.
So that should help us a little bit, right? Last note on such a pattern, Rachel, what is the price action that we would want to see as traders intraday on this hour-long candlestick chart that would negate such a pattern?
So all in all, this type of pattern is more of an accumulation or distribution pattern. So if in this case, this would be more of an accumulation pattern taking place where people are slowly accumulating positions over time. And then so the stock or whatever we're looking at is making first lower lows and higher and lower highs. And then it kind of turns around and shifts to making like the same level of highs, but higher lows until we break through that resistance. So typically with especially this inverse head and shoulder pattern, a bottoming pattern like this, that's when accumulation is taking place. And then vice versa, when we see it flipped on its head, we see that distribution taking place.
Okay, so we would remain short-term bullish as long as we hold the white uptrend line here. And if we can make a new high that would eliminate that right shoulder, then we would feel like the pattern that we are speculating, which is ultimately what we do when we're looking at patterns. Remember, patterns are only approximations or potentials really until they play out in the manner that you expect. So if this is in fact a head and shoulders pattern, we would need to see price action below the uptrending white line. That would tell us that that's what that pattern is. But we could negate that bearish pattern, potentially bearish pattern, if we traded through this 2270 or so to the upside. That could be completely negate this appearance of a head and shoulder, and that would then give traders more reason for short-term bullishness. Does that feel like a proper way to say that without overextending my thoughts here a little bit?
That's fair. That's super fair because and I think that speaks to looking for confirmation with traders and having that as part of your plan, what your confirmation is going to look like when you get your signal. So a lot of times folks will look 2 to 3% above resistance or above that prior high with a close above that high. I know, Kevin, obviously I say this all the time. You've made up your own rules with that. You have your plan. So I think it's just having that confirmation in place and seeing it play out. rather than anticipating it, just reacting to it.
I like the sound of that as well, Rachel. Not that that's a surprise to anybody. Okay, I'm going to bring in, Rachel, a couple of your charts now, which, normally we'll look at, we've got the two that help us out a little bit, stocks over the 50, stocks over the 200. Did you want to start there? Do you want to skip straight to your sector rotation, look at things? Because I know that there's been, you and I at least have been talking about the rotation being quite instructive for us collectively.
I'll start on whichever. So the decision is yours.
Let's hit this one real quickly because what I'm noting is a bit of a pullback in the number of securities over their 50-day moving average, but the stocks over their 200-day looks like more of a consolidative trend in the month of July, which I take to be a positive, but I'd love your input on that.
I would agree with that statement. So I think that that is a very positive sign. We still have the majority or over 50% of stocks in the S&P 500 above their 200-day and above their 50-day moving average. The thing that I kind of find interesting when you talked about seeing that sideways moving pattern as far as those two measures of market breadth, that's what kind of gets me to look down at new yearly highs and new yearly lows. And you can kind of see there was a spike in new yearly highs, and then ever since we've kind of been in this sideways pattern of new yearly highs. But the most interesting thing to me about this chart is you notice that throughout this entire time, there has been no increase in new yearly lows. So the new yearly lows list hasn't changed at all. It hasn't expanded. And when we typically see corrections or pullbacks and things like that, through price, we typically see that new yearly lows list start to expand, and we are not seeing that here. So what that's kind of telling me when I ask these questions to myself, it may be telling me or giving me clues that, yeah, not as many stocks may be hitting new yearly highs, but we may be seeing the less stocks are hitting new yearly lows and seeing some strength in other pockets of the market.
Very interesting thought process, because sometimes, Rachel, we get bogged down by the idea that everything needs to be going up. And it can be easy to forget that by stocks not making new lows, we might have a floor in place in many cases. And that can be instructive for us. One, if we don't have many stocks in the NYSE making new yearly lows, well, then it kind of tells us that there's kind of a broadening market rally here, meaning if everything is off of lows, well, then we're not trending down. That means that more groups are holding their own or maybe going sideways. But if they're not going down, that's not a negative, Rachel. Like we say about new highs not being bearish, new highs are bullish in nature. Conversely, we could say the same thing about new lows. New lows are not bullish. New lows are bearish. But if we're not making new lows collectively as a group, as many stocks are not making new lows, that also tells us something about the strength or the health of what's going on here. Okay, let's move off of this one. Let's look at your green chart. Call it the green chart for obvious reasons here, everybody. But this one is telling us about the relative strength, the outperformance of these individual sectors relative to the return in the S&P 500. Now, we know, Rachel, we've got many of these sectors positive on the year, but that's not what this chart speaks to. So clean this up a little bit for our viewers who are maybe a little unfamiliar with this chart.
Yeah, of course. So there is obviously a lot going on this chart. And so we're basically taking a top-down approach when looking at the market. So we're looking at all the different sectors, and we're comparing all of those sectors to the S&P 500, which is that benchmark for us. And we're comparing that on a 6-month time frame. And you can use whatever time frame you'd like, but I just chose 6 months in this case, just because we're on Trader Talks here today. So we're looking at a little bit of more of an intermediate term time frame. But essentially what this graph is doing, or these graphs are doing, is they're showing the relationship between that sector versus the S&P. And if the line is going up, it means that there's relative strength in that sector and there's rotation into that sector. And if the line is going down, it means that there's relative weakness or possibly capital flowing out of that sector. So I think, Kevin, I mean, the interesting thing that you saw when you first looked at this chart is the significant strength in technology. Obviously, we saw that on the chart absolute basis, and now we're also seeing it on a relative basis. And when you have outperformance on both sides of that, absolute and relative, that's what attracts more capital. So that's kind of like a high-level overview of why I built this and what we're seeing here.
Yeah, you know what it is to me, Rachel? It seems like a great reminder of where people are putting their money. Again, yes, we've had return detail that suggests you could do well this year in financials. They're up for the year. Industrials clearly doing well. Discretionary may have found some short run support. But if you wonder about leadership, what is carrying the SPX? It's so obviously technology that it lets us know this is actually why we can ascertain that the movement in the NDX is a little better than the movement in the SPX because of the allocation of the NDX, right? It is so heavily weighted towards tech comparatively to the S&P 500. That's why I think this is really, really interesting look. So if we're talking about outperformance, in order to outperform the S&P, Rachel, you would have to have not just a properly allocated portfolio equal to that of the S&P, but you would have to likely be outweighting tech, outweighting industrials in order to beat the S&P on a year-to-date basis this year. So that's one way to take that, everyone. Yes, and of course, I can share this with you. This is a pretty intriguing one, of course. I have been placing this in our show notes frequently when we've been referencing it in class. I will absolutely bring this into the chat for you all. Here you go. Please remember that when we share grids, when we share scripts, these are not guaranteed for accuracy. They are not guaranteed for timing, and they are not a recommendation for your use, everybody. That said, if you do want to use it, we don't want you to click the link in the chat. You want to copy that link, rather. So copy it, not paste it, copy it, and then head into your setup tool, open shared item, and you paste it right here. Hit, here, I'll show you real quick. Hit preview, populates like so you get the quick visual image, you know you're good. And then hit import, and it'll open that up in a separate grid for you. And then, of course, you want to save that grid so that you can reference it going forward. Okay, what about the semis? Let's take a peek at the semis, and then we're going to, we've got this rising situation. My goodness, Rachel, do we need to be worried about the speed of this trend, the angle of this rising? And I'm going to use it, Rachel, a rising wedge. It's not ideal from a definition standpoint, is it?
No, exactly not. And it kind of speaks to Lewis's question in the chat about, is it scary if tech is leading? And the answer is no, because of what we just talked about. So leaders become laggards sometimes, and sector rotation is the lifeblood of a bull market. So if we've had a strong uptrend like this rising wedge that you mentioned here with a lot of strong momentum and relative strength in tech, we could see possibly after a pattern forming or after a breakout, we could see that correction through time, like what we talked about, and maybe see some rotation and strength in other pockets of the market too. So, I mean, again, here, just to your point, Kevin, to kind of trace back to this, we've still been making higher lows in the RSI. There's still a lot of strength here. So the most bullish thing a market can do is get overbought and stay that way. So as long as momentum keeps up with the pace of trend, then that's kind of where we'll be looking for signals.
Yeah, looking for something different, right? Still don't have anything different. We can speculate that this rising wedge is going to break to the downside, but until that happens, that speculation is nothing more than just that. It's speculation, and that may not serve the trader. You know, that's one of the reasons that trend analysis is so important for trend traders. You don't need to be the first one through the door on the next trend move. Meaning if this is going to break down and you're believing that there's a bearish opportunity here, that's all well and good. And yet, if you get started before the trend breaks, you're going to have your metal tested quite frequently. That's usually the way it goes. I don't know about all of you, but I have found as traders, when we buy before the trend changes, then we put ourselves at greater risk. You're basically stating, well, I have conviction in this scenario playing out the way that I think it's going to go. And then the moment it goes against you, that conviction suddenly wanes quite a bit. And that's one of the reasons traders will let those things shift, gain confirmation, and then they start to position themselves. It's okay to always position a little bit early if you wish to participate, but the thought process that's been benefiting a lot of traders of late, I'd say, is the one that suggests starting small, right? If you're going to take a counter trend view and you think that something imminent is happening, well, take small position size, wait for confirmation, get confirmation, and then you can always add to something that you started on a small basis. Nothing wrong with that. Okay, Rachel, quick look at what's moving around from a sector basis today. Looks like communications is taking off here. We're up 1.5% on the group. This looks like a notable development in this space. We are going to be getting a few reports this week, and I'll tell you what, I'm not going to tell you. I'm going to let you speak to this chart. What do you see on this thing? Because this looks interesting.
I see a little bit of a range type of breakout here. Obviously, we saw a gap up. And the only thing we're seeing momentum confirm it because we haven't made a new high yet. Right. And so we're still lower highs in the RSI. But for this one, I went down one more time frame to kind of tell a little bit more of a story. So if we go to like a 20-day hourly, and just take it a step down for our intraday traders, we were in that range, and then we just had a power move through that range right then. So that could tell me if we hold that previous resistance around, what was it, 375, 376, we could be looking towards 380.
Yeah, I'll tell you, at this point, having broken this downtrend line, I think a lot of traders are going to start targeting that 381, and let's see if you can get there, right? And if you can get there, they might take a little bit off up there as you run into a zone that has been resistance before, or an area from which we've retreated in the past. Doesn't mean we have to again, but it's an area where if we're going to take a breather, that makes sense. Doesn't mean we can't pop through. If we pop through, some traders would put back any position they took off. But I like what you're saying here because, very basic, Rachel. If we just looked at this, if I decided to, hang on a sec, let's go back to my daily. Let's keep all of this on there. I'm just going to save this as a drawing set. And what that does, everybody, is it'll now allow me to maintain my drawing tool on the daily chart. And if I go back to my hourly, now I can clear these drawings from this one, and I've got a clear look at things. Well, the thing that stands out to me is this, Rachel. It looks pretty much like a bit of a flag the whole way, doesn't it? I mean, we can just draw it like this, put in a low in here. I mean, that's exactly what it looks like. And when you think about rallies and how rallies give back about a third to a half, my goodness, that just lines up beautifully for a technician. Pull back to the 38% retracement, and then you move right through the downtrend line. This has the makeup of a continuation move on an hourly look like this. Your thoughts?
You got it, man. And you're also seeing that golden cross taking place with that 16 period crossing above that 32 period moving average at the same time. So it's just, we talk about like that confluence of signals that you're getting, and we're getting a lot of those all in one. We obviously had the measured move, the breakout, the gap up, gap above the resistance, and then also just the moving averages showing that shift too. We'll have to wait for, I guess, kind of more momentum to really see this through.
Yes, we would like to see that carry, of course, but we're not going to argue with the break when we get it. That definitely is what it looks like at this point. We'll see if it maintains, though, okay? All right, everybody, let's see how we get UNH in there. Let's jump back to some stocks in the news this morning, Rachel. Let's look at a few of those, being that we took a minute we hit up communications. It's the only one, not the only one that's rallying, but it's making the biggest move of the groups. But I wanted to make sure to get to some individuals today, everybody. So I thought we'd hit on some upgrades. Rachel, stop me if you want to speak about any of these charts in particular, but Pinterest got an update today, an upgrade at Morgan Stanley to overweight from underweight. New target is at 45 a share, up from 37 a share. And the company's investments will deliver monetization improvements and earnings power in the second half of 2025 per Morgan Stanley. It wasn't just Pinterest, though, Rachel. It was Pinterest and Etsy both. And I'm always intrigued a little bit when we get a company like Morgan Stanley, a big analyst firm, and they give us insights that are not just one company, but maybe a particular area of the market. So Etsy, Pinterest kind of fall into that same zone, and both getting an upgrade today.
Yeah, so with that one, I'm looking at Pinterest on a little bit of a longer time frame. So if you just switch to a 3 weekly and use log scale and then connect the highs, those recent highs.
Yeah, let's go to my price axis, log scale. There we go.
There you go. And then connect to those highs if you just zoom into this recent, like since the of 2024, and you connect those highs.
Something like this.
Yes, and we gapped above that so far this week. So the interesting thing to me will be if this is going to hold long term, to see if there's this close of this weekly candle, if it's going to stay above that trend line, it kind of have more momentum on its way up. But that's just kind of the thing that I noticed when looking at this chart. Sometimes we see like an early breakout like that, or then it has to pull back and it needs a little bit more time to rebuild and repair. But but that longer term signal will be that confirmation to see whether it's 1 or 2 weekly closes above that level.
Another thing that stood out to me was the uptrend got broken for that 4 to 6 week window here with the tariff tantrum, and then that got right back in gear. So, a lot of traders would have had to been probably, if they were following their rules, forced back into the trade because it recaptured the trend line so nice and cleanly. And I'll just point out, you're up $6 since that occurred, everybody. So if you were following rules that said, hey, I'm going to stick with the trend, out when the trend is broken, if we get back into trend, you'd have been happy to join right back in here. When it recaptured the trend line, you'd be up about $6 a share. And obviously that's just a piece of cake in hindsight, as always. Technical analysis, amazingly, it works so well when we look back in time. Not so great in a forecasting basis necessarily. It doesn't always work out the way we think, but it's a great reminder of what technical analysis can do for us. Okay, how about one more area that got upgraded today? And I took this notably because this is in the transportation group. So first of all, let's look at the transports. We're in an interesting spot, Rachel. I leave these long-term lines on the chart for a reason, everybody. If I pulled this back and added a little bit of time, well, we just got done talking about a broken down trend line, Rachel. What once was support can then be resistance. Well, that's why this line is red. So we have managed to put transports right back into the former uptrend line, now a potentially resistant still an uptrend line, but now potential resistance, excuse me. We are in an interesting spot here, though, aren't we, given that? So I want you to, real briefly, speak to what you see on this chart. I'll try and draw some added lines in here, and then we're going to look at the stocks in this space that got upgraded today.
Of course. So we kind of had like a little bit of a bottoming pattern taking place in the Dow Jones. Like I see a neckline level around that 15,000 level. Where we had almost like a head and shoulders type looking pattern. And we had a strong move, obviously, out of that possible pattern. And now we're having a little bit more of a consolidation. But I think a lot of Dow theorists out there, if we still kind of use the transports to confirm the industrials, we've definitely seen those industrials leading. We haven't seen the transports really catch up. And that could be what we're seeing now, especially with RSI staying above 50. We've been in a bullish regime with the Dow Jones transport. So and we're holding that support. We're holding all those moving averages. So it looks like to me that we may just be seeing another one of those corrections through time in the last week or so.
Kind of looks just like that. And I'm glad you brought up the Dow theory. I can bring over my Dow theory look, everybody. And just a brief reminder of Dow theory. This is a very long-term, old-school look at things. Dow theory goes back to Charles Henry Dow's work on relationships between the Dow Industrial Average on the left and then the Dow Transportation Average on the right. The idea being when these groups are moving in concert, everybody, then you can confirm your trend. Well, the Dow Industrials on the left are at similar highs. Could it be, I hesitate to say it, but it looks kind of like a triple top. And then here you've got the transports that have already shown a breakdown and then a rally back into the resistance line. We would like, if we are bullish, we would love actually to see the transports making a higher high and more or less invalidating all of this action here below the red line. That's what we would like to see. Now we are kind of at a decision point. As you'll notice, the last 3 weeks here have been into and attempted to be through it, and we just couldn't hold it yet. So we're waiting for some semblance of confirmation on Dow theory here. If we made a rejection, for example, and we're back below that 15,700 that looks to be pretty important here on the chart, that would be notable in the short term, everybody. So that's something for traders to kind of keep an eye on in the longer term view. Remember, this is a weekly chart on both the industrials and the transports. So wanted to show that. Let us do quickly back to the stocks that I was mentioning that were upgraded in this space. One of them is CSX in the rail area. So of course, if we're going to be improving economically, we're going to be sending more goods across the country. That's why rail may have been updated here. So both CSX and Norfolk Southern, NSC, upgraded today at TD Cowen, both to buy from hold. The CSX upgrade is from 32 to 45 for a price target. And here on Norfolk, it is up from 263 to 323. So that's a $60 increase, ballpark of more than 20%, Rachel. This one, NSC, looks a little bit different here in the sense that it gapped strongly and it's at what was once resistance.
Yeah, that's looking like a breakaway gap to me, where it's breaking and gapping above that previous resistance, like what you mentioned. And I think it's notable that momentum's really following it too. We even have, we have strong uptrend with all those moving averages as well. I think the other thing with both of these stocks, which we did with the other one, is just zooming out a little bit. And if you zoom out, it gives you more context to the overall pattern in the long term for both NSC and CSX. They both look like possible accumulation or bull saucer type patterns. So I think just looking at it on different time frames too, and the fact that it's holding this breakout is notable.
Yes, it is notable. And let me just share some of the specifics here, because we had a question about merger talks between these here. The commentary out of TD Cowen is that the firm, TD, sees higher likelihood of an east-west rail consolidation. They believe a potential bid for Norfolk Southern, which is offered up by UNP, Union Pacific, could put a floor on the shares of CSX. Further, it's too early to rule out a potential takeover of CSX by Union Pacific, according to the analysts at TD. So beyond that, the commentary on NSC is that the firm sees a higher likelihood, again, of that same consolidation, dating all the way back to the UNP. So it all comes back to the potential for consolidation here. It sounds like according to analysts, the leadership group would be Union Pacific looking for acquisition of NSC, which would, in theory, put a floor, according to TD, on CSX as well. So kind of an interesting note. Bears watching here. The channel associated with UNP seems to be notable and potentially tradable, Rachel, but the trend is a little different here. This might not be a trend trade for somebody who's stepping into something like this, given this news, this might be one of those longer term views that could play out favorably over an extended period of time rather than the current trend analysis may suggest.
Exactly. It's all based on your time frame and your own process. But I love the call out on that channel. I cannot talk this morning.
Some Mondays are tough, Rachel.
It's a Monday.
That it is. All right. I'm afraid we are at time, everybody. I want to thank you all for joining. Of course, always appreciate having you all join us on a Monday or any other day of the week. We love having your attendance. So thanks for being here. If you like the conversation, hit that thumbs up button for us down below. We're going to get this one reviewed and archived for you as soon as possible to be out there in the archive today. And your thumbs up will lend us a little bit of a hand. So big thanks to you, Rachel. Always love having you on a Monday. Appreciate you sharing your thoughts, your ideas, and your charts with our viewers.
Thank you for having me, and thank you for joining, you guys.
Absolutely. Big thanks to Mr. Fairborn there in the chat. Appreciate you as well. Follow us on X, Mike Fairborn CS and Kevin Horner CS. And don't forget to make sure you're subscribed to the Schwab YouTube Coaching channel, everybody. Have a great Monday. We'll see you all again real soon.